Are you looking to open your first Roth account? It's a great decision. This is one of the best steps you can take to secure your financial future. Here's an example of the returns you might see if you started investing right at age 18. Investing just $200 per month, you could have $133,000 by age 38. By age 50, that has grown to $440,000. If you continue on and invest just $200 a month from age 18 to 67, which is the full retirement age for most people, that account balance could grow beyond $2,093,000. Now that we've touched on the incredible potential of compound growth over time, let's walk through how to open an account, a Roth account, if you are age 18 or older. I'll start out by saying that you must have earned income in order to invest in a Roth IRA account. That means earning taxable money from a job. This could be a W-2 job, contract work, running your own business, etc. You can't invest birthday or holiday money if you aren't working. I've gone ahead and searched for Fidelity in my browser, but you could go with any reputable brokerage, Morgan Stanley, Vanguard, Charles Schwab, to name a few. Now that we've gone to Fidelity's main page, we have two options. We can log in if you have an existing account, or if you do not have an account at the brokerage you've chosen, we can go to open a new account. Once you select that, you'll see these options here: retirement, investing, trading. In this case, we want the Roth IRA, which is that middle selection right there. We'll go ahead and select open now. And then it will ask, are you already a customer? If you are, click yes. You'll log in and then you'll move through that process. But in this case, we'll select no, and it will lead us through and give us a couple of different options and some info to fill out. As you can see, we need to confirm identity and employment information. This is a part of opening any brokerage account for anti-money laundering. So they will ask for your employment information. This is, where you're working, the company, what kind of income you have, the level of your income, etc. They'll ask for your social security number. You will need to provide your social security number to tie the account to your identity. And then finally, once all of that is done, you will provide them with your bank information so they can confirm that bank connection and you can begin transferring funds into your Roth account. Go ahead and click next. And here is the information that we'll fill in. So first name, last name, all of that, social security number, your date of birth, your citizenship, your phone number, an email address, your home address, all of that. Then once this is all complete, we would hit next, and it would go on to ask you a couple of questions. Essentially, it will ask, are you related to anyone who's an investment advisor or involved in a brokerage? They do need to know about that. But otherwise, it typically will ask you about your experience in investing. And so you can tell the brokerage, oh, you are very experienced, you are inexperienced, what your risk tolerance is. Those kind of questions are things that they will be asking. And they're just trying to get a better sense of who you are as an investor and the kind of products and securities you might be interested in. Once all of this has been confirmed, you will then have the option to transfer money. It'll take a few days to clear. Once it has cleared, you can begin the process of actually purchasing your investment choices, purchasing the securities that you are interested in. I'm not going to touch on that in this video. You can find many examples of how to do that in different videos and on forums. So that's how you open a Roth account. However, you can also open a Roth account if you are younger than 18 years old using this method. As long as you are employed and earning an income, you can start investing. Before we walk through that, hit the like button if this is helpful. First, you are going to need the help of a parent or guardian. This is because the account will be held under their brokerage login. However, the Roth account itself will be tied to your social security number, which means all the capital, money, that is within the account legally belongs to you. Okay, now that we've covered how to open a Roth account if you are over 18, let's go through how to open an account if you are under 18. So we're going to go to this drop down and we're going to select Save for Kids and Education. And then we are going to select I'll do it myself and apply that filter. Scroll down a bit and we can see down below here, Roth IRA for Kids. That is what we're going to be selecting, Roth IRA for Kids. And again, you need to have earned income. You need to be under 18 and working and earning that income. You need your parent or guardian's help for this, but basically they will log in, provide their information, go through the same process that we did before, except it will be tied to your social security number. Again, we'll select no, click next. It is the same process as the initial setup, except your parent or guardian will need to create a Fidelity account for themselves first, and then they can set up the Roth IRA for Kids. This will allow you to invest and save for your own future before you turn 18. You go through the same process, connect the bank account. Once that connection has been confirmed, you can transfer money. Once it has settled, you can begin your investing journey. It's as simple as that. Remember the growth charts I showed you earlier? Let's run one more calculation to show your ending balance if you started investing at age 15, just 3 years earlier. Those 3 years bring your account all the way to $2,742,000. That's an increase of nearly $700,000 for just those 3 additional years of investing. The earlier you start, the easier it will be for you to reach your financial goals. Now, let's talk about some of the limitations, restrictions, and details of Roth accounts. First, the maximum contribution to a Roth account is $7,000 for 2024, plus $1,000 if you are age 50 or over. Additionally, all contributions are after tax. You don't get to deduct them on your tax return. Second, the Roth is so powerful because it allows earnings to grow tax-free over time. When you reach age 59 and a half and have had a Roth account for at least 5 years, you can withdraw your earnings completely tax-free. Third, if you withdraw earnings before 59 and a half, you will pay tax on the earnings plus a 10% penalty on those earnings. There are specific circumstances where the penalty, not the tax, can be avoided. Look up Roth IRA penalty exceptions for more info. Fourth, you can always withdraw your Roth contributions with no penalty or tax if truly needed. See this video up here for how you can use your Roth account as an emergency fund when money is tight. If this video was helpful, consider investing in our channel by subscribing. It's that button there. Good luck with your financial journey.